I mean, so PVR are doing well on your screen. Well, Dhiraj Agarwal is now joining us, Managing Director at Ambit Capital. Dhiraj, great to have you with us here on the program.
Hi,
glad you could make it to the studios. Raining still outside? And
Not really now. It's been nice to be back at the studios rather than on the Zoom.
It's great to have you here.
Great to have
so impersonal, yeah.
How are things looking, Dhiraj?
So not too bad, I would say. So markets had a fantastic run. So a little bit of a sideways consolidation here is not completely unwarranted. But overall outlook continues to be good. I think by and large the earnings season has started off well with a few disappointments here and there, which is par for the course. So, but at this point in time, clearly market is looking for growth. I call it the growth chase. So any company sector which is reporting good growth numbers or relatively better growth numbers as compared to its peers or other sectors are finding favor in the market at this point.
We got one big dhamaka warning, right? Polycab, where, I mean, it was big beat. Yeah. Apart from that, we've not seen very much by way of meaningful earnings upgrades. Numbers have met, etc. But that's yet to come. Maybe it'll come. We're still early in the
so it's a very diverse kind of earnings performance at this point of time if you see, right? So when Polycab is one extreme example of a fantastic set of numbers. So I mean, if you see, one thing which is there is that on the demand side, on consumer demand, we saw that in Hindustan Unilever numbers as well. That's beginning to look a little bit weak. But at the same time, on the investment side, the gravy train just continues. So we are seeing good credit growth, good amount of capex growth, etc. So that relative shifts keep on happening in the market at all points of time. And stocks are rotating very, very fast in the current cycle as compared to what we have seen before.
Okay. By the way, I just want to mention that the headline index may be flat, but there's plenty beneath the surface that's doing very well. I mean, just look at this, right? SJVN is up almost 7%. Credit Access Grameen is now up almost 7% as well. And we were pointing a couple of these stocks like PVR that are hitting fresh highs. Canfin Homes is up almost about 5%. APL, Apollo Tubes. So there's plenty to choose from. But I wanted your thoughts, Dhiraj, and good morning once again, on banks, right? The numbers are good, but the rally has also been pretty sharp. I mean, ICICI Bank is up over 20% from the lows in March. Do you think there is further scope for re-rating?
I think there is. It will not be as sharp as what we have seen in the initial part of the re-rating, right? So a lot of valuation discovery is already done. From here on, to expect the kind of movement that we saw in banks in the last 2 years is not going to be easy. In fact, even at the index level, it's going to be more moderate and 12% per annum kind of a performance. So it's not that market's going to run away despite a very strong economy, because there are, as we discussed right now, there are sort of offsetting factors. So it's I like to call it, it's a bit like a sine curve. Something is going up, something is going down at all points of time. So tech is dragging down right now. Consumer is looking slightly weak. I'm not saying collapsing, but slightly weak. But at the same time, the whole capex cycle, spends out there, credit growth, all of that is looking strong. So we'll trudge along.
All right, what's the pecking order, Dhiraj, then? I recall in the past you've said, I think SBI, Axis Bank and ICICI Bank, I think they were the top stocks that you were interested in.
Yeah.
Does HDFC Bank get a mention in there, or would you stick to these top three?
So I would stick to this top three. HDFC Bank, I mean, it's consolidated over the last 2.5 years, so it's certainly looking interesting. So valuations are no longer as stretched as at what it used to in the past, and there's a sort of a divided street on HDFC Bank at this point of time. Do they go back to the glory days and become the premium sector, premium position again, or does ICICI Bank take that spot? So ICICI's consistency of delivery is absolutely outstanding. So between the two, if you would still force me to pick one, I will say ICICI. It's like the wall.
Okay, all right. So we got that banking query out of the way, but we are speaking about auto stocks as well earlier this year. And I recall you mentioned from the two-wheeler space, the Royal Enfield is something you like, Eicher Motors and Tata Motors.
Correct.
How do you approach Eicher Motors in particular? Because suddenly you have competition that's coming in there, which has a bike lover. I never had that. I mean, and from a shareholder's perspective, suddenly they're looking at Bajaj Auto, Hero MotoCorp, because they're going to give it a bit of a challenge with the tie-ups that they've done. Would you buy Eicher on the dip?
I would buy Eicher on the dip. I'm sure some challenge was bound to come. It's not a surprise. Eicher is like Mr. Bajaj actually said it in public, right? That Royal Enfield is a bank and we're out there to rob it.
Yes. Yes.
I mean, why not?
He knows how to make these statements, right? Let's stick.
Right, so everybody's talking about it, and Aisha took a beating as soon as Triumph and Harley Davidson pricing got announced.
True.
But at the same time, we have seen this competition trying to nibble at Royal Enfield before. So RE has got a nice definitive niche in pricing, and more importantly, they are creating a completely new segment in the global market, in the 350cc to 450cc or 500cc range. That doesn't exist. So they're actually literally expanding the market, and they're doing it very well. So I think Aisha will do well. I'm not saying competition will not do well, but it's a huge market, right? So I would buy Aisha on the dip, yes.
You know, I was debating whether or not to go ahead and buy the Bajaj Triumph. I haven't yet got to test ride it. And suddenly a friend of mine said that, but Nigel, there's a 750 that's coming in from Aicha in the next 18 months.
Yeah.
So what about that? So I was like,
Problem of plenty, right?
Yeah. Good news.
Good news, definitely.
But there you go, you're waiting for Aisha. That's good news too.
But you know what? This also speaks a lot about not just demand, but even demand for electric vehicles, right? I mean, anyone and everyone you talk to now is looking to buy the next EV.
That's right.
So what do you do as a stock market observer? Do you pile on to EV stocks, or do you think that story is largely played out? Not just Tata Motors and Maruti, but some of the auto ancillaries as well.
No, I think that story is a long way to go. So EV conversion will keep on increasing.
Yeah.
Somewhere slow, somewhere a little fast. So Tata Motors has done a phenomenal job in the four-wheeler EV space, 80% plus market share of a small market arguably, but still 80% plus market share.
True.
And the group is now foraying into making batteries and investing in tech out there. What if they do some kind of a breakthrough cost reduction in the whole battery technology, which is the most expensive piece of an EV, right? So I would continue to invest in EV and look for EV investments. I mean, obviously some parts of it might be a little bit of expensive or bubbly, so the valuations have to be kept into mind. So TVS's EV strategy is fantastic. Maruti yet to completely get there, right? But Tata Motors has done really well. So they're all, in Aisha's case, obviously that kind of segment, there is no EV yet. So they're a little bit of, in some sense, they're shielded from the EV conversion. But let's see for how long.
Dhiraj, you know, you mentioned consumer looking a little weak, and you said IT also is on the weaker side. But those are areas where maybe not IT so much, but consumer is where, at least at the lower end, you can find stocks which are actually which have been bombed out. I mean, you know, actually we had someone on Friday, Hiren Ved was with us of Alchemy, and he was saying that he'd buy some of these, you know, lower end of the consumption space where perhaps there could be a recovery. Would you bet on that kind of a thing? Because
so I'm not,
at least the price is on your side, maybe.
Yeah. So I'm not so on top of the smaller consumer names, but the larger consumer names are not really cheap, right? And there again, within the whole consumption basket, there is no one single story which is playing out. So the paints volume are still doing well, whereas we saw FMCG volume struggling a tad. In consumer discretionary, there are some segments which are doing well, some not so well. So, you know, India has become, from that point of view, a very, very diverse
QSR,
economy.
for example, I mean, names like Jubilant Food, etc., which have been languishing for a
Correct.
while. Would you want to take a bet on those kind of names?
I think it might be a bit early. The valuations, I don't think, are still down to a level where they become compelling. And QSR's valuations, with respect to its own history, has to be seen in the backdrop of competition from aggregators like Swiggy and Zomato, right? So Jubilant pre-Swiggy and Jubilant post-Swiggy are two different stories. Earlier, when you thought of a food delivery and you wanted food within 45 minutes, you would just say, at least it's reliable. It'll be at your doorstep in 30 minutes. Now you think of A, which food category to choose from. And second, even if you think of pizzas, then they say, okay, maybe today I should try Smoke and Joe's. Because Swiggy can deliver it, right, within the same 40 minutes.
So you continue to remain positive on Zomato. I recall in the past you were quite positive on it, right?
Yes.
So hold on to that view.
Yes.
Okay, in fact, you know, I should tell you, Swiggy and Zomato now, Swiggy of course has Instamart,
That's
right? And a lot of the other players have it too. In literally like 5 or 10 minutes, you get groceries delivered to your place.
Yeah.
So forget about food, right? I mean, groceries are coming to your house like in 5-10 minutes.
Yeah, I ran out of soda
It's
at
big.
home on Sunday when I was hosting a brunch, and I just installed 5 minutes.
You can invite us next time.
Interesting one.
Will do.
All right, thanks a lot for joining in. Appreciate your thoughts here.
Thank you so much. It was a pleasure coming.
Thanks, Dhiraj.
Thank you.
Okay, by the way,